Did you know there is a way to have a 0% loss when the market crashes depending on where you put your money?
Just start saving. We're going to change the world.
What's up, folks? My name is Dallas. I am a financial professional helping small businesses and individuals achieve their financial summit. And today we're talking about one of my favorite strategies, what I call zero is your hero, and it's using different types of fixed indexed assets or accounts that will allow you to earn interest on the upside with a guarantee no loss when the market goes down. This fixed index strategy or indexing option is something that is provided or offered by several different providers. Really just depends on who you're talking with, who your agent is, what type of financial professional you have as to who you're going to be working with. But this will kind of give you a rundown as to how it works and how you can have a guarantee no loss, okay? So with this fixed index concept, it can be inside of annuities and it can be inside of life insurance. That's really the two options. Within those two frameworks, though, there are several different tax codes on the annuity side, different types of life insurance, IULs, that use the indexing or fixed index concept that we're going to be talking about. Most providers will use the S&P 500 as their main indexing option. There's a lot of other options that are out there, a lot of other indexes that may or may not be better. Most of the time, S&P 500 seems to be the best overall average, naturally, just like we see in the actual stock market itself. So what happens is on the upside of the market, you will get a gain up to a cap. Let's say the cap is 8%. So for a 1 year time period, let's say the market goes up 6%. In that allocation for the S&P 500, it's usually called point to point, which means an annual average. You will gain 6% along with the actual S&P 500. Follow me? Now let's say the market is screaming and it goes up 15-20% in 1 year. Because there's a cap of 8%, you're still capped at an 8% growth. All right. Now flip the script. Let's say the market crashes 10%, 20%, 40%, repeat of 2008. Who knows? Instead of partaking in the downside, there is a guarantee no loss. I will often say zero is your hero, though it's a corny saying, but it kind of gets the point across. I would rather never lose money than have a negative return. And even over a 20-year time period, the S&P 500 or this fixed index strategy using the S&P 500 may equal about the same. The S&P 500 might even be a little bit above that option. But the difference is in retirement, depending on, again, your advisor, your financial professional, who you're talking to, the market might crash and you'll lose your money. So if you don't have that guaranteed no loss feature, the retirement aspect of your retirement, the actual money that you're relying on for the rest of your life, may be in danger when you get closer to retirement. Listen, folks, if you are gaining any knowledge from this or want to learn more about it, by all means, leave me a comment. There's a link down below for you to hop onto my calendar if you want to meet. Free consultation. I never charge to have meetings. Let's talk about it. Let's see what your dreams and goals are, and let's get you to your financial summit. To wrap up this short video, I want to give you 3 reference points to take home after watching this. Number 1, you will take part in the upside of the fixed index concept, although it will be capped depending on the provider. Cap rates are different. Cap allocations are different, structurally different, depending on if you're getting above it, below it, in between it. Different providers have different things. Ask your financial professional, your life insurance guy, your financial advisor, whoever. Ask them, what does this mean? What's my true cap? Okay, it's very important. But you will take part in the upside. Key point number 1. Key point number 2. There is a guarantee no loss. It's just like what we've been talking about. When the market goes down 20, 30, 40, 50, 60%, whatever it is, World 3 happens and everybody loses everything, 401ks or nothing, your account will remain the same. If it had 200,000 before the market dropped, it will have 200,000 when the market does drop. Remains the same, 0% loss. And key point number 3, a lot of these fixed index categories or types of accounts, whether it's within annuities or different types of life insurance, often will generate a guaranteed income. We really didn't talk about this. This is kind of a bonus for you if you made it this far to the video, okay? So in retirement, a lot of times, or these days rather, it's really hard to save. You've probably heard, save $1 million, live off the dividends. Well, not only is it hard to save $1 million, that $1 million is no longer worth $1 million today, and dividends do not pay like they used to way back when. So that $1 million that you would have had to save in the 80s, 90s, early 2000s even, is probably more equivalent to like 5 to 7 million today. in order to pay you what you need to live on and to achieve the goals that you have in retirement. So by having this fixed index strategy in place, however you're using it, again, talk with your financial professional. They'll be able to help you determine what your goals will dictate of what type of account you need. It will generate a guaranteed income rather than trying to save as much as possible and hopefully it's enough. Let's put a plan together that says if you do this, it will pay you this guaranteed for life with the guarantee no loss on your gains. That's a wrap for today's video. Again, if you guys have any questions, put a comment down below or click the link in the description if you want to get on my calendar. Free meetings, I never charge. Love you guys. We'll see you soon.